The rise and fall of the third richest person in the world, whose net worth was a whopping $131 billion. And it plummeted by more than $60 billion in less than 10 days because of one controversial report. Let's look into this altercation between the Adani groups and Hindenburg. Presented by Highbrow Talks. Adani's rise to power was marked by a series of strategic acquisitions and partnerships. In the 1990s, the company acquired several ports in India, establishing itself as a major player in the country's maritime sector. In the following decade, Adani expanded into power generation and agribusiness, and by the 2010s, with the support of Indian Prime Minister Narendra Modi, the Adani Group was one of India's largest and most influential companies. Some of the key indicators of his success are: 1. Revenue. The Adani Group's revenue has grown rapidly over the years, reaching approximately $13 billion in the 2020 financial year, according to reports. This represents a significant increase from the company's revenue in previous years, reflecting its rapid expansion into new industries and markets. 2. Market capitalization. The market capitalization of Adani Group, which is a measure of the company's value, has grown significantly over the years. As of 2021, Adani Group was valued at over $70 billion, making it one of India's largest conglomerates. 3. Port capacity. Adani Group's port capacity has grown rapidly over the years, with the company acquiring several ports in India and investing in new port facilities. As of 2021, Adani Group's ports have a combined capacity of over 200 million tons per annum, making it one of India's largest port operators. 4. Employees. Adani Group employs tens of thousands of people in India and around the world, reflecting its growth and expansion into new markets and industries. However, as Adani's influence and wealth grew, so did the controversies surrounding the company. Environmental groups and local communities criticized the company for its land acquisition practices, which they claimed were illegal and harmful to the environment. There were also concerns about the high levels of debt held by the Adani Group, which some claimed put the company's financial stability at risk. The downfall of Adani started when Hindenburg Research published a controversial report claiming stock manipulation charges on the Adani Group. Hindenburg allegations include shell companies, owned by Adani's close relatives, were trying to manipulate stock prices from tax havens like Mauritius. Though the timing of the report is questionable, as it was published just a day before the FPO on January 25. Its claims have raised serious questions on corporate governance, and has triggered all stakeholders, from investors including India's largest bank, the State Bank of India, and the country's largest insurance company, LIC, to issue clarifications on their limited exposure to the Adani Group. Multiple media reports citing sources state the Indian stock market regulator is examining the claims made in the Hindenburg report. The Adani Group has rubbished the report and issued clarifications, but the market sentiment has largely been negative, slashing the combined market value of Adani's group companies to nearly half. Key takeaway: Hindenburg Research specializes in short selling and is known for producing research reports that detail the firm's short positions and the reasons behind them. They basically buy stocks from a lender. They believe this stock will decrease in value, and sells those shares. They then publish the report criticizing the company, and when the stock prices fall, they buy the shares back at a lower price, return them to the lender, and pocket the difference as profit. Most interesting point is that they could have made over $30 billion. Is this why they published this report at this point of time? Let me know your thoughts in the comments section.